Even though warnings of a downturn may make investors nervous, they can still take steps to protect their investments and limit their losses. One investment that can help provide a steady income and protect against economic downturns is a real estate investment trust, or a REIT. Buying real estate investment trusts for growth and dividends is a common strategy among cautious investors as we get ready for the conditions of an inverted yield curve. When inflation is strong, dividends from REITs are very appealing to income investors just like me. It's also a safe way to protect against inflation and reduces downside risks. If you're looking for a stable source of income with room to grow returns when the market and economy recover, REITs are a good bet. Today we'll take a look at 7 of the best real estate investment trusts to buy right now for growth and dividends. Medical Properties Trust, ticker symbol MPW. Medical Properties Trust has grown and grown to become one of the biggest owners of hospital real estate in the world. It has an amazing portfolio with 447 facilities and 44,000 beds in 10 countries on 4 continents. This makes it a great choice for investors who want to make money in this field. More importantly, MPW's dividend yield is an impressive 8.5% and has grown every year for the past 10 years. With numbers like these, Medical Properties is a great option for people who want to make money from hospital-related real estate. Many investors are happy about Medical Properties because the company recently said it plans to start a $5 million buyback program. The program shows that the company is able to make big profits and put them to good use for its shareholders. It's a situation where everyone wins, which should encourage both short-term and long-term growth. Second, Innovative Industrial Properties, ticker symbol IIPR. Innovative Industrial Properties has had a lot of success and is now one of the most important companies in the cannabis industry. IIPR has made a name for itself as a reliable partner that helps cannabis businesses of all sizes all over the United States. It owns 111 properties with a total of 8.7 million rentable square feet. This gives state-licensed cannabis businesses a place to thrive and grow. In November, IIPR reported great results for the third quarter. In both lines, these results were better than what analysts had predicted. Sales went up by more than 32%, and net income went up by 25% to $37.3 million. But IIPR stock is down over 50% from last year, and even though it's done well consistently, it has a dividend yield of over 7%. This makes it a very attractive bet at its current price. Number 3, National Storage Affiliates Trust, ticker symbol NSA. National Storage Affiliates Trust is another top REIT that keeps growing quickly in the self-storage market. It has a strong core strategy that focuses on the most populated cities in the US and has state-of-the-art facilities. As of now, the NSA runs more than 1,100 properties in 42 states and Puerto Rico. The REIT also has an impressive 71.5 million rentable square feet of space, which makes it the 6th largest self-storage operator in the United States. With such a large number of properties, NSA is still at the forefront of innovation in its field, and its growth doesn't look like it will slow down anytime soon. Also, over the past 5 years, its same-store sales and cash flow from operations have grown by a huge amount, making it a leader in its industry. Also, the stock trades at a big discount compared to its 5-year average and its peers, which makes the bull case for it even stronger. Alpine Income Property Trust, ticker symbol PINE. Alpine Income Property Trust is one of the best microcap triple net lease REITs, and its retail properties rent to a wide range of tenants. Their total portfolio, made up of 149 properties in 35 states, has 3.7 million square feet. All of these properties are full. It's also home to some of the biggest companies in the world like 7-Eleven, Lowe's, and others. In a short amount of time, the REIT has built up an attractive history of dividends that yield about 5.6%. Also, it has enough money to pay its dividends because its free cash flow has grown by more than 38% over the past 5 years. Also, 53% of its total annualized base rent comes from tenants with investment-grade ratings. This makes the stock a safe and stable choice for people who want a steady source of income. And before we continue, don't forget to subscribe to the channel, hit the like button, turn on that notification bell to be notified every time a new video is uploaded. And if you like this video, you may want to check out this other video I uploaded about these 4 REITs trading below book value and paying strong dividends. Let's return to the video. Number 5 on this list, Global Net Lease, ticker symbol GNL. Global Net Lease is one of the best REITs because it focuses on high quality office and industrial properties and has a very strong tenant base. This is supported by the high occupancy rates and longer lease terms, which create a safe place with steady income over time. It's one of the more secure income stocks because it has a large number of different clients who are very reliable. Most of its business is done through long-term contracts, and its buildings are pretty much always rented. Even though investors might be worried about the consistency of dividend payments, the huge yield of over 11% makes those worries go away. Number 6 on this list, and one of my personal favorites, Realty Income, ticker symbol O. Realty Income is a blue chip REIT because it has a high yield, a business model based on triple net lease, and credit ratings that are good enough for investment. It pays a dividend every month and has a strong credit rating and a track record that can't be beat. It has also raised its payouts for 26 years in a row, making it a dividend aristocrat. Also, its total return over the past 10 years has been more than 140%. Because this business can't be done online, Realty Income has a real edge over its competitors. Its portfolio is made mostly of basic services like grocery, hardware stores, pharmacies, which likely won't be hurt too much by big names in e-commerce like Amazon. Because of this, it's likely to keep growing at a very fast rate for a while. Number 7, Office Properties Income Trust, ticker symbol OPI. Office Properties Income Trust, which owns 162 properties all over the US, is a leader in the office REIT market. OPI stands out from its competitors because it's proud to rent its offices to high-quality tenants, such as the US government. The fact that the government is one of OPI's top tenants, that gives it a big edge over other competitors. Not only is it unlikely that the government will not pay its bills, but long-term contracts that usually last around a decade provide stability and steady cash flow. Also, 90% of the rooms are full right now, which makes it very unlikely that the lease will be renewed. More importantly, it has a dividend yield of 13%, which is very good. So to conclude this video, in the current volatile market environment, these REITs offer a great mix of safety and growth. So here we go again, we'll just review them really quickly. These REITs are great for growth and dividends to help us get through the next recession. Medical Properties Trust, ticker symbol MPW, is a top hospital REIT that keeps getting better and better. Innovative Industrial Properties, shares are down more than 50% for the year, making this a great time to buy. Think of it as a discount. National Storage Affiliates Trust, they have a strong portfolio of properties and they're a clear leader in the self-storage niche. Alpine Income Property Trust, in just a few years, it built up a nice dividend profile. Global Net Lease, an enormous dividend yield of more than 11% makes investors less worried. Realty Income is a dividend aristocrat that has grown its payout for the past 26 years, and again, one of my personal favorites. Office Properties Income Trust has a shockingly high dividend yield of 13% and an impressively high occupancy rate of 90%. And that's all. I hope you enjoyed this video. If you're looking at another way to invest in monthly dividend income, check out this video on JeffQ, which uses a covered call strategy that can return double-digit monthly dividend yields. If you enjoy similar stuff, check out my other videos, and if you like it, hit the like button, subscribe to the channel, and turn on the notification bell, and I will see you in the next video.